Welcome guys to another video. In this video, based on the topic, you can see we will be looking at market patterns. Now, if you might ask the question, what is a market pattern? Now, a market pattern is a price action movement that occurs repeatedly in the market. And after knowing like the likely outcome behind each of these price action movement, normally when you see them happening, you can take an educated guess to say, all right, the market will move in this particular direction, right? So we have two main types of market pattern. You have what is called like a reversal market pattern or a continuation market pattern. So with a reversal market pattern, usually if the market is moving in an uptrend and we see those types of patterns start to reverse to appear, then we can expect a reversal from an uptrend into a downtrend, or a continuation pattern. If we're in a market condition that is, the market is bearish and we see a certain type of pattern or price action movement resembling a particular pattern start to appear, then we can anticipate that the market will continue in its original trend and continue going down, right? So here are a few patterns on my screen that I tend to pay close attention to. These patterns. There are way more market patterns that than what I have right here out there, but I don't use all of them. Mostly when I see these patterns, I will pay closer attention to the market, in anticipation of the next move. So I'm going to just go through these patterns with you guys and show you, give you examples and show you how, I implement them in my trading, right? So the first one is the double top. Now, let's look at the double top. All right, guys, so the double top, as you can see on my screen, I have two examples. Usually, the double top is a bearish reversal market pattern, right? So usually we tend to see the double top at the end of a uptrend. So as you can see with this first example, we're moving in an uptrend where the market is creating higher highs, higher lows until we reach this area where we notice the market reject twice to the same zone, creating equal highs. Then we break structure, right? So if we should draw a trend line at these lows, if we should draw a trend line highlighting the lows, we'd have seen that after creating the double top rejection, we break structure, push down, creating a low, right? Retest, and then the trend change into a downtrend, right? With this example over here, it's pretty much a double top reversal pattern as well. But the only difference, or the slight difference with this one, is that this one, you notice that we don't have a double top rejection. Rather, we see the market creating a lower high. So when you see the double top form like this, it's a strong indication that the market will reverse to the downside. Usually what you would see, the market candle would close here, but you would see like wicks rejecting the area of the previous high. So that is showing you selling exhaustion, right? Selling exhaustion. That is what the market is telling you. So when you see the market create a lower high, that is telling you that the selling pressure is so high that the market is failing to even reach the previous high, right? So normally we look for a break of structure as well for the market to take out low, right? Retest before we look to sell off. And usually, like I said, the double top is a bearish reversal market pattern. So we're looking for these pattern at like resistance areas, right? Because remember, we look to sell from resistance, right? So it's only right if the market is going up, uptrend, and we see a double top rejection at a resistance level, then we're looking, all right, sellers, might be stepping in now. Now is a chance to sell, right? You guys. So, yeah, that's it for the double top. Let's look at the double bottom now. All right, guys. So this is a example illustrating a double bottom, right? So the double bottom is a bullish reversal market pattern. Usually we tend to see the double bottom at the end of a downtrend. And usually we look for these type of patterns at support areas, right? Because that's where we look for buyers to take over the market. So boom, you see we have this downtrend pushing nicely to the downside, creating lower highs, lower lows. Upon reaching this area, you notice we bounce, we push up, create that lower high, and then we trend back to the same area, reject, form support again, and then we push up, taking out market structure, break, retest, and then we start a new trend. All right. So usually we see it, the double bottom at the end of a downtrend. And again, it is a bearish reverse, bullish reversal market pattern. If we should look to the left, to the right of that example, we see a similar example, right? But with this example, we notice that one of the low is higher, right? We're not at the same level. So with this one, usually it indicates that the buying pressure is high in the market, in which the market is even failing to attempt to even go back down or to reach the first low, right? Usually what you would see are some weak rejection, and those are showing you like the burn off, the exhaustion, the tiredness of the sellers to get price back down. Buyers just stepping in, increasing the pressure, causing a break in market structure, and from there we have a new trend, or uptrend, right? So that's it for the double bottom. Now let's look at the next patterns. All right, guys, so we're on to the head and shoulder over here. So this is an example of a head and shoulder market pattern, all right? Right over here. And pretty much a head and shoulder is classified as a bearish reversal market pattern, because usually after a head and shoulder, we look for some movements to the downside, right? So usually the movement of a head and shoulder pattern is somewhat like this. So we will usually have a uptrend in market, just like you see here, market pushing from low to high, low to high, higher low, higher high, higher low, higher high, right? Higher low, higher high, higher low, and then lower high, break, structure, and then we drop. So with this movement, you would have realized that we created a lower, a higher high right here, then another higher high, then a lower high. So in this case, this would be our left shoulder. This is our head. And then this is our right shoulder. So all of these, creating our head and shoulder pattern. So right here would have been like a good entry point, the break and retest of this higher low point, right? So market break structure, retest, we could look for entry, with the head and shoulder confirmation, or entry could be up here as well. But pretty much this is usually what a head and shoulder pattern looks like. Probably, in the live market, it won't look exactly what I, draw right here. But once you understand the principle behind how to spot it, then it doesn't matter how it looks, you will highlight it in the market, right? So the concept is the uptrend. Usually we see like the market start creating lower highs, and from that we get a break of structure. If we look, we have the left shoulder, the head, and the right shoulder there. To the left of that now, we pretty much have the inverted head and shoulder, right? And the inverted head and shoulder pattern is a bullish reversal market pattern. Usually after we see a bearish, an inverted head and shoulder in the market, then we start to look for buying opportunities. So usually the inverted head and shoulder pattern looks something like this. We will have like a downtrending market where the market is pushing from highs to lows, creating lower highs, lower lows, lower highs, lower low, lower high, lower low, pull back, creating a high, and then what? Higher low, and we break structure and we start this new trend, right? So in this movement, as you can see, we were pushing in this downtrend, right? And then we created this level, we push up and we started create higher low. So if we should look, this would have been our left shoulder. This is our head. And then this is our right shoulder. All right? So all of this right here give us our inverted head and shoulder pattern. So left shoulder, the market push down, creating head, and then pull back, creating a higher low. And this higher low point is our right shoulder. And then from that, from the right shoulder, we usually get the break-off structure. So as I can see, we push up, we take out structure, and then the new trend usually start. And like I said, this is a bullish reversal market pattern. Hence, we normally look for these type of pattern at key support levels only. You cannot look for a inverted head and shoulder pattern at a resistance. Never. You only find these at support levels. So once you're at a support and you notice this type of movement or price action movement in the market, then you can anticipate that the market will move in an upwards direction. Likewise for the example that we looked at first with the head and shoulder. The head and shoulder is a bearish reversal market pattern. Hence, we will look for these type of patterns only at resistance. If we see these type of price action movement at the resistance level, then we can take an educated guess along with other confluence to say, all right, the market will move in a downward direction, right? So that's it for the head and shoulder and the inverted head and shoulder. Let's look at the next pattern. So we're on to our next pattern. So ascending triangle. So ascending triangle is a bullish continuation market pattern. When you see this type of pattern in the market, we usually look to say that, all right, price movement is going to continue in the uptrend, because the ascending triangle usually looks something like this, where we have a horizontal resistance level where the highs are respecting, and then we have the lows getting higher and higher. So it's like we have climbing floors, right? So this is an indication. If we look, remember now, guys, these patterns that we're seeing it is just the market movements. We as traders, because we see these type of repeated movements in the market, then followed by a likely outcome, normally, we can take an educated guess to say, all right, this is going to happen next. But if you really look, it's just the structures. So it's back to market structure, guys. So once you understand market structure, you will not even pay attention to even the names and so forth, right? So I don't want the guys to just go in the market looking for these patterns specifically to trade off. Once you have to just understand the market structure, because if you look, this is just an uptrend, but it would have looked as if, okay, we're ranging somewhat where we're respecting resistance, but at the same time, we're seeing that the buyers are still the dominant force in the market, because what? The lows keep on pushing higher and higher, showing us that the buyers are willing to send the market up by buying at a higher price and keep getting price up. So usually when we're seeing this, we're expecting that eventually price will break the resistance. And upon breaking the resistance, we normally wait for a pullback to the zone or to the area for price to just continue, retest and just continue to the upside. But it's very important to have patience with these things, because price can do opposite, like break into the downside and reverse as well. But the likely outcome of an ascending triangle is for price action movement to continue to the upside. All right. So that's it for the ascending triangle. To the right of that, we have the descending triangle, and it's pretty much the opposite to the ascending triangle. So with the descending triangle, we're in a downtrend. It's like price reach a area now where it is respecting support, right? Price is just bouncing from support. So with that, we're seeing that we're in a downtrend. It is also showing by the highs are forming. So we're seeing that the sellers in the market are willing to send price lower by selling at a lower price. Lower and lower. Price is just getting lower and lower and lower. Right? So usually we look for the market to continue in its original trend, and that is down. So usually we wait for a breakout at the support area, wait for a retest, and then we look for price to just continue to the downside, right? Again, it's very patient. It's recommended that you be very patient with these guys, right? Because price can easily do whatever it wants, push down, push up, and just start a new trend, right? So you have to be very patient with these. Wait till it playing into your favor, then you execute, because price can always do whatever it wants, right? So that's it for the ascending and descending triangle. So on to the next pattern. So we're on to our next set of market patterns. So first one over here to our left, we have the bullish flag. Usually this type of market pattern is a continuation pattern, right? So usually it resembles something like this, where you would be in a uptrend, market trending up nicely, right? And then market creating higher highs, higher lows. Then usually you have something like this where you get a breakout, and then to get back to the zone, like this, the previous resistance area, you get like a retracement, like a new trend start, where we're seeing, even though the overall trend is in an uptrend, right? You will see like a counter trend where we now have this downtrend, right? Take us back to the zone, and then we just break out to the upside. So if we drop a trend line on the top, on the bottom, you will see like we have a little bearish channel. This bearish channel take us back to the zone that we're looking to buy from. because which is only right. We're in an uptrend, the market break a previous resistance area. Now, it's a possibility that price pullback to here, we can potentially form support for price to continue in its original trend, right? So this type of movement give us the flag pattern, right? And we normally look to buy, right? When we see these type of pattern. When you see these type of pattern in the market, we look for buying opportunities, right? So let's look at the bearish flag. So the bearish flag is pretty much the opposite to the bullish flag. The bearish flag is a continuation pattern, which will usually look for sells. So usually it resembles something like this, where we're in a downtrend where the market is creating lower lows, lower highs, lower lows, lower highs. And then usually we have something like this where we have a breakout and the market, in order to get back to the zone for us to continue sell, the market, how the market get there, it do like a little counter trend retracement where we go in a little uptrend. Even though the overall structure is in a downtrend, going a little minor uptrend to get us back to the zone, and then we break out once we get to the zone. So in this sense, if we drop a trend line on the top and one on the bottom, we will realize that the market is moving in a bullish channel to get us back to the zone, and then usually we break out to the downside following that type of movement. So these examples that I went through, the patterns, are what I normally look for the most in the market, and make an educated guess based on what I normally expect to happen when I see these type of movement. Of course, along with other confluence in the market. And like I said, once you understand market structure, market pattern, you will realize that it's just market structure. All right. So hope this video was helpful towards you, and I'll catch you in the next video.